What is going on, everybody? It is your boy Stas here. Welcome back to another video. So we got a lot to break down in this video, including the housing market. We'll talk a little bit about mortgage demand, dive into some interesting numbers here, which kind of blew my socks off this morning, guys, when I was reading this. And we have to break down the markets as well, the stock market, that is, including individual stocks, some of which are crushing it right now. And of course, we got to break down some charts and kind of what I'm looking to do in these markets. So sit back, relax, take a sip of your coffee. Let's not waste any time, and let's dive into the video. So it's currently about 11:30 a.m. on the East Coast, and it's a pretty mixed bag out there as of now. And granted, we do have 4.5 hours left in the session, but as of now, the Russell's down 0.4% as the NASDAQ is up 0.3%, the S&P's down 0.1%, and we have the Dow Jones down 0.2%. So in terms of the main indexes here in the U.S., as of now, the only green one is the NASDAQ, right? Big tech. The NASDAQ 100 tracks the 100 largest companies within the NASDAQ pretty much, right? So that's doing well today. We also have the VIX. What's the VIX doing? The VIX is down 0.5%. Gold and silver are doing well today as well. Gold's up 0.5%. Silver is barely up, but still up about 0.1%. So in terms of the stock market, in terms of these charts, nothing really has changed. Not too much has changed from when we recently covered them. Last night, I believe, in my night video here on YouTube. You guys can see here, SPY still trading within this little downwards channel that it's been in for a good almost 10 days at this point. Same thing with Triple Q. You guys are seeing that. And right now, well, I guess the thing here is if I extend this to the right, we are slowly starting to break out on Triple Q, but not fully quite yet. If we do break 313, 315, though, to the upside, that's where we could get a full-on breakout. But again, we are not quite there yet, but we are starting to creep above, 311, which is good. We already broke the highs from yesterday here on Triple Q, which is also good. But mind you, 2 trading days ago, we're not quite yet above the highs from 2 trading days ago. So if we do break above again 313, 315 here on Triple Q, that is where we really could start getting a big move to the upside. And if SPY starts moving above, let's say, the highs from yesterday, 417, 418, that is where a big move to the upside could be coming. And the funny thing is, even though the markets today, stock market, it's not doing that great, we have a lot of individual stocks that are doing very well. We'll talk about those in a couple of minutes here. But before we do, let's switch gears a little bit and talk about the housing market, more so mortgage demand. We'll talk about some numbers here that blew my socks off. I'll be honest with you guys. Well, not really. I mean, it makes sense. So I'm not too surprised, but the numbers are pretty crazy. So mortgage demand falls to the lowest level in 22 years, as of, I guess, today, recently, amid rising rates and slowing home sales, which makes sense. Rates are going up from 0. Mortgages are going up as well. The average contract interest rate for a 30-year fixed mortgage with conforming loan balances, $650,000 or less, increased to 5.4% from 5.33%. So it keeps on ticking along, guys, and now we're pretty much in the mid 5%, and that's for 30-year mortgage rates, guys, for the most part, right? And, at this point, I'm seeing experts saying, and by the way, I'm not an expert at all when it comes to real estate, mortgages, housing. I'm a novice when it comes to real estate, guys, but I do understand it a little bit. And from what I've been seeing, 6% mortgage rates, 7%, pushing 7%, that could be in the near-term future. No doubt about it here, and we're already seeing it creep up to the mid-5s. Seriously, this is getting pretty insane. Well, it's not insane considering mortgages were 10, 15, 20% at one point in time, but considering recent history where they were just at 0, 5%, 5, 6, 7%, that is pretty intense. And I guess they weren't at 0. People were getting mortgages for 2.75, 3%, a little bit more than that. But, it's a lot more than that today, right? It's a lot more than that today. And what does that do, guys? It deters people from wanting to go out and buy a house. And it's not like the real estate prices have come down 50% and rates are now at 6% roughly. They're still very high. Sure, the market has softened a bit. That's definitely It's happening, and it might continue to soften. It probably will, but it hasn't completely crashed to the point where it's like I'm willing to dive into these markets and pay a 6-7% interest rate. It's not there quite yet, at least from my understanding. Please chime in the comments down below. And applications, get this, guys, applications for a mortgage to purchase a home fell 7% for the week and were 21% lower from the same week 1 year ago. So they fell 7% on the week, which is big, and 21% year over year, essentially, which is a pretty big drop. And again, as interest rates are going up, people are like, I'm not going to buy a house yet. I'm just going to wait till interest rates come down, or I'm going to wait till the housing market collapses, which who knows if that is even going to happen. Nobody knows, guys. And the truth is, a lot of people that wanted to buy a house, they already did it in 2020 when rates were super low. Sure, a lot of people are priced out of the markets. That's a serious problem that we're seeing right now. A lot of people don't have enough money. They don't make enough money to even buy a house or to even afford it, especially now that interest rates are going up. And again, the prices have not even collapsed. It's not like we saw a 50% collapse in real estate. It's nothing like that. And I don't think it's going to get to that point, because today, this day and age we're living in, I think it's different from 2008. We're not going to get into that in this video, but it's an interesting time we're living in. A lot of people are priced out. Mortgage applications are coming down, and refinance demand dropped 6% for the week and was down 75% year over year, which that's a big number, but to be honest, it does not shock me at all. I mean, who's refinancing now? I mean, I guess there are people that are refinancing, but let's be honest, everybody that wanted to refinance, they did this already in 2020, 2021, before that even. They already did this. And maybe there are people out there that have very high rates or mortgage rates, sure, and they're still refinancing to get it down to a 5-6%. Sure, there's people out there doing that, but for the majority of people, they refinanced when it was at 2.5%, 3.5%, whatever, and they got their rate down, and they're looking pretty. And another thing worth mentioning, which is keeping the real estate market probably propped up at this point, is people don't want to sell their houses because they're locked in to these very low rates. Because if they sell their houses and their rate's 2.75 on a 30-year, they're going to have to get a new loan, which might be 5.5% or 6%. And sure, they can refinance down the line. That's always an option. But right now, people know if they sell, they're going to lose the interest rate, and then they're going to have to find a new place to live where rents are going higher, housing's still going high, so it doesn't, going up. So if you really think about it, if you're in a house, you have a lot of equity in the house, and you have a very low rate, what's the point of selling? Unless you want to go move into some other state. It depends on your circumstance, obviously, but what's the point in selling? I mean, seriously, let me know your thoughts, guys. So we might have went a little too long on the real estate portion of this video, but those are some thoughts there. And I'd love to know your thoughts. Let me know down below in the comments. And now let's talk about some stocks. But before we do, actually, get your free money from Moomoo. If you haven't done so already, that is, use that link down below and deposit at least $100. And get this, you get up to 5 free shares of stock, each up to $2,500 with only a $100 deposit. Again, that's linked down below, or you can go to stocksurfast.com/Moomoo. It's free money. It also helps out the channel, guys. I appreciate you. And you could also get 6 stocks from Webull with any amount of money deposited. And I think that promotion from Webull literally ends today, or I think it ends tomorrow. One of these days, you guys need to dive on and get those 6 stocks. Again, linked down below from Webull. And with that being said, cheers, guys. I appreciate the support. Let's get back into the video. So let's talk about Chinese stocks very, very quickly before we wrap this video up. They are on freaking fire today. Holy crap. Alibaba's up 11.3% at $116 a share. It is up from 81 to, again, 116 in just the past week and a half, 2 weeks, it is up 42%. So Alibaba, and Alibaba is not the only one, guys. Let me tell you, there's a lot of other ones doing very well today. So we got news of a bunch of video game approvals from regulators in China, and that boosted the sentiment in the sector, but obviously in the overall stock market, the Chinese stocks, at least the tech stocks out of China, right? And China's gaming regulator greenlit the publishing licenses for 60 games on Tuesday, the first list of approved video games since the end of April, Reuters reported. It's a sign of easing regulatory pressures for gaming stocks in particular and the tech sector at large, like I said. And what have I been saying over the past couple of weeks, guys? It seems like the tensions here in China, within the Chinese stocks, U.S. regulators, all that jazz. I don't think the tension's gone completely, and I wouldn't be surprised if we do get some more tension in the future. But as of now, from what I've been seeing the past couple of weeks, the tension has been easing, in my opinion. We got news of, China looking to work with regulators. They're looking to let, I think, private auditors come in or whatever. We got that news a couple of weeks ago, and it's just been good news after good news after good news, and these stocks are being rewarded. And I called this out, did I not? I mean, I said if this breaks $100 a couple of days ago, 95, 100, we get the golden cross break out of the moving averages. I even said this morning, if it breaks 105, we're going to be getting a huge move. Actually, that might have been yesterday I said that. And we're getting it. It's up 11%, and there might be even more upside. Now, granted, it is a little bit overbought in the short term. RSI is screaming red, so it might pull back a little bit in the short term. But overall, this momentum we're seeing, I don't think it's going to slow down until the technicals show me, which they're not showing me. They're not showing me that yet. So in the short term, we could be going to $125, maybe $130. That's the next main resistance, which we probably get. We'll probably get some selling pressure around there to get this thing to come down a little bit. But overall, I'm happy with Alibaba. I'm still down on my position, guys. Full disclosure, I'm still down. But the fact that it's been tearing it up lately, I'm pretty happy about that. And I'm not looking to sell anytime soon. I'm just holding on, and who knows, maybe if it pulls back under 100 again, I'll buy more. We shall see. But overall, Alibaba's crushing it. JD's crushing it today as well. And we have Tencent, PDD. These are all just ripping. I mean, if JD breaks 67 into the 70s, there's a lot more upside based on this chart. I'm seeing Tencent, TCEHY. This is up 5%. It's above the moving averages, multi-month high. We have PDD, which I still don't know how to pronounce this stock. It is up 8%, completely breaking out on this 4-hour chart, multi-month high. So these Chinese stocks are finally getting a legitimate relief rally, not a little BS, 1 or 2 day, little 5-10% move, and that's all it is. Then it dumps down again for fresh lows. That's not what we're seeing right now. And does that mean we're not going to go to lows? It doesn't mean that. We could easily go back to the lows, but in the short term here, we're finally getting, like I said, a short-term rally, and it does not seem like it wants to slow down anytime soon. So what do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe. Join my Patreon if you guys want all my moves in the markets. Get your 5 stocks from Moomoo and your 6 stocks from Webull, and join Seeking Alpha if you guys want $40 off the premium plan. That is linked down below. All of that helps out the channel. I appreciate you guys as always, and I'll catch you in the next video. Peace out.